Welcome, everybody. We're about to begin. Thank you for joining us. Today we have Mr. Jerry Baldwin and Craig Bewick. They're both going to be talking about micro crude oil futures. So without further ado, I will let Craig start off.
Great. Thanks, Nico. And on behalf of CME Group, I'd like to thank TradeStation and YouCanTrade. Both have been great partners to CME Group in helping us educate and kind of promote futures and options trading to individuals really around the globe. And it's a pretty exciting time to be doing what I do, which, as you can see on the screen in front of you, I'm a senior director in the client development sales group at CME Group, which basically means I work with firms like TradeStation. And like I said, in helping to educate individuals around the globe in kind of how to use futures and options on futures in their trading portfolios. And it's an exciting time to be doing that because we've seen an explosion in the number of people around the world that have kind of, wanted to take a little bit more control over their financial destiny over the last 18 months, open up self-directed trading accounts. And with that, we've seen a lot more enter the futures and options on futures world. And a lot of what has enabled that to happen, is the advent of these micro products. And so, I'm excited today to talk about the newest micro product that we launched just on Sunday night called the Micro WTI Crude Oil, which is a smaller version of the standard crude oil product that we've had out there for years. And, it's off to a great start. And it's one of those things where when we launched the micro equities, the success of which I think is very well documented, the biggest question I think we got was, when are you going to launch micro crude? Well, here it is. So it's an exciting time. And I'm also excited to be joined by Jerry Baldwin for the first time in one of these webinars, one of YouCanTrade's coaching stars. And I think he's going to bring a lot of energy to this presentation. So I'm going to get through my slides pretty quickly here. I want to give a little bit of background on crude oil, on the new product, and I'm going to let Jerry take it away with how do you use these things to trade. And I think the combination is going to be a good presentation. So here we go. I'm not going to read the disclaimer word for word, but the point here is that we want to make is that futures and options on futures are different than a lot of things you might be trading. They're different than stocks. They're different even than stock options. So we've put together what I think is a truly world-class educational portal at CME Group called the CME Group Institute. And I'd encourage everybody, whether you're a seasoned futures trading veteran or a total beginner, to go check that out, because there's a lot of good information that our education departments put together. And I don't think there's any such thing as knowing too much. So check that out. Once you've learned it, once you've done your homework, obviously we believe that futures and options can be an important tool in your sort of trading toolbox, if you will. So why these products? Why are we talking about it? We've got in front of you, we've got a statement here that the standard crude, which we refer to as CL, and the mini crude, which we're just going to touch on today, are two of the world's most liquid and actively traded crude oil products. And that's just a fact. You can see that, open interest, which is a measure of the amount of contracts open, and it's a measure of liquidity, really, hit a 2-year high in February of about 2.5 million contracts, which is 10% increase over January. This year, we're averaging over 1 million contracts a day, and it's a global story. Right? This isn't just a stateside thing. In 2020, 29% of WTI futures volume came from non-US customers. And the reason for that is, and we're going to get into this, is WTI crude is a global benchmark, right? Although our production has declined a little bit from its highs, the US remains the top producer of crude oil globally, which makes WTI crude oil a global benchmark for crude oil. And it's why it's the price, and it's why the price of WTI is so important. Here's just a couple of facts on what WTI is. It's domestic light sweet crude oil. That's okay. We're not going to get into a lot of details about the actual crude itself. But the point here is that this future contract has a delivery point in Cushing, Oklahoma, which has a storage capacity of 90 million barrels of crude. And you can see that 3 million barrels flow in and out of Cushing every day. Well, what does that mean? Again, that just means it's a global benchmark. And that's the only reason that I'm highlighting that here is just to stress the fact that the U.S. is a major crude producer. This is a major product, and it's really kind of how the global energy industry benchmarks the price of crude. And here's just some supply characteristics of crude in the United States. You can see that, we on the graph on the left side, we did have a bit of a decline with the pandemic-driven shutdowns that we saw, earlier last year. Naturally, as the world economy sort of shut down in a lot of cases, the need for energy also similarly declined. But now we've started to pick that back up. And like I said, I think we're up to about 11 million barrels of crude oil a day in the United States, which is slightly under that 13 million at our high. But still, and even though we've become a net importer of crude again, we remain the biggest or the largest crude producer in the world. So again, just kind of another slide underscoring that idea. And here's just a graph of the price of crude since the beginning of the year. And I don't think I probably have to tell anybody who drives a car or flies on a plane or, does one of the hundreds of things that we use crude for, that crude's gone up, right? So, and you can see this line goes straight up from the beginning of the year until today, for a lot of different reasons. Obviously, demand has come roaring back for energy. And we have some administrative, the current administration has made some changes to our crude production that, has lowered a little bit the domestic crude production. So, lower supply, higher demand. You don't have to be a PhD economist to know that generally equals higher prices. And as you can see in front of you, that's what we've seen. So why the micro crude? Well, like I said before, we launched our micro equity indexes, the S&P, the NASDAQ, the Dow, and the Russell in May of 2019, and we found immediate success. I'm not going to get into the numbers because, like I said, I think that's the success of those has been pretty well publicized. But the two big questions we got after those products were launched and after we realized the success that we had with them from customers probably like yourselves was, one, when are options coming on those? Well, we launched options on those equities, and when's micro crude coming? Two biggest questions we got. We knew there was a demand for this. So it's sort of at long last, we finally launched the micro crude product this past Sunday night, so 2 days ago. And it's off to a great start. I think we traded about 17,000 contracts the first day. We traded, I think, close to 25,000 contracts yesterday, and we're already up into the mid 30s today. So by any measure, that's a great start to a new product. So it sort of, validates kind of what we thought, which was that there was a demand for this smaller size crude product, which is 1/10 the size of our standard, what you might know as the CL product. So where the CL is 1,000 barrels of crude, this micro crude, or MCL, if you will, is 100 barrels. So what that means is, let's say you were long one contract of the CL and the price moved a penny, the price of crude oil moved 1 penny. Well, that's a $10 swing either way. If it moved up, it was for you. If it moved down, it was against you if you were long, right? Now it's a $1 move. So it's a much more flexible, it's a much more manageable notional size for the product. And here's just some stats, some of them I just mentioned. It's 1/10 the size of the standard CL contract. It ticks, and this is important, it ticks in the same exact increment that the bigger contract, the CL, does. So if the price is, let's say, around $75, you might see a price of 75.00 bid at 75.01 offer. So it's a real tight bid offer market, just like the CL. So, but as opposed to the CL, that one tick represents $1 instead of $10. And then the margin there is a big deal, right? So, and it's just really 1/10 the size of what the CL is. And let me be clear, when I say margin in futures, it's different than margin in stocks. So if you're trading stocks on margin and you get essentially a loan from your broker, a margin loan, that's a loan that you're paying interest on. So if you buy $100 worth of Apple, but you only have $50 and you borrow that extra $50 from your broker, well, that's a loan from your broker on which, again, you're paying points. Margin in futures is really a performance bond. So it's just money that you have to put up to hold a position overnight. So in order to hold one micro crude futures contract overnight, it's $530 right now. The CL, the standard contract, would be $5,300. So again, it's you can see, especially if you're capital constrained, it's a very efficient way to use your capital. But for that $530, you essentially get $7,500 worth of exposure to crude. So that's what we mean when we say futures are capital efficient. Another important thing to remember, these things expire 1 day prior to the standard CL future, and they expire in a cash settlement. So there is no delivery of these micro crude contracts the way there would be. And again, your broker probably wouldn't let you. But if you held a standard CL contract to delivery, you'd actually have an obligation to make or take delivery on that, 1,000 barrels of crude. These are financially settled, which just means that, we do a P&L, a final P&L move, profit and loss. We move the cash and you become flat when it expires. And then the hours, like most of our products, these are open from 5 p.m. Sunday night Chicago time until 4 p.m. Friday, with a 1-hour break every day at 4 p.m. Chicago time. So it's nearly around the clock trading from Sunday night to Friday afternoon. And here's just the expiration, and you can see the expiration, the definition of the expiration is a little confusing. Micro crude settles 1 day prior to the standard crude. Standard crude terminates 3 business days prior to the 25th calendar business day of the prior month. It gets confusing. I would strongly recommend, if you're trading crude, micro crude, or any future, go to the CME Group website, look at the futures expiration calendar out there, and make sure you know on what day the future you're trading expires. Because this is, obviously you can see this is a little bit of a confusing definition of when that's going to expire, but it's something you want to know. So the last thing I'm going to touch on here is, well, you might say, well, I don't want it to expire and to be flat. I'm long crude and I want to stay long crude because I think it's going to continue higher. Well, you simply do what we call a futures roll, which is nothing more than a calendar spread transaction. So if you're long, let's say the August expiration in micro crude, and it's coming up to expiration at the end of July, and you want to stay long crude, well, you simply sell the August and buy the September. By selling August, you get flat there, so you don't have a position. And then you're long the September, and you've maintained that long exposure to crude. And the nice thing about rolling a position at CME Group is that we have, generally in most of our major products, we have a lot of liquidity providers that are out there making a price in that spread market, a very tight, efficient market in that spread that allows you to roll that position in one transaction rather than 2 transactions where you're actually selling the August and then buying the SEP. You can do that all in one transaction. So it's a very simple mechanical thing to do, but it does enable you to maintain that exposure going forward. I think I'm going to stop there. Hopefully, I know I went through that fast, but I want to make sure that I give Jerry time to introduce himself and then kind of go over, I think, what most people are here to listen to is kind of how he sees these products as a trader. So I'm going to stop there, but we'll have some room for question and answer at the end of our presentation today.
Craig, that's excellent. That is excellent stuff. Let me go ahead and share my screen.
Yeah, I'm going to stop this.
That's perfect. Let me go ahead. I'm going to share screen with you guys. All right, very good. Everybody, you should be able to see my screen now. Let me go ahead and at least introduce myself. But before I do that, guys, I want to thank Craig for the opportunity to be here with you guys. I want to thank you guys for taking time out of your busy day to be a part of what we're doing here today. This is tremendously exciting and positive, what is going on here. And like I said, like Craig said, it's a long time in coming, but Craig, thanks for hosting this, for doing this, for everything that you and your team do to make so many great trading pieces for us to be able to trade. So, phenomenal. And what a great piece this has been already. This is really knowledgeable as far as helping us understand, how this came about and a little bit about it. So Craig, thank you. And it's really great to be here. And again, guys, thank you for being here and spending time with us. This is a really big day and a day for a lot of people that has been a long time in coming. So again, welcome to everybody. My name is Jerry Baldwin, by the way. Okay, my name is Jerry Baldwin, and yes, I am with YouCanTrade, and I am again excited to be here and excited to be a part of this. I want to give you just a brief background on myself, guys, so you know who's talking to you, and then I do want to get right into charts. I mean, I'm enthusiastic. I'm really I'm high energy, and I'm excited to show you guys some of the things that you are able to do with this phenomenal new product. So. Briefly on my background, I am a full-time trader since 2004. I come to you today with more than 14 years of experience of international speaking and instructing, starting with stock, going to options, and now currently an active trader in the futures market. Okay. I've worked with thousands of students in both live classrooms as well as web-based settings. I've been fortunate enough to have been featured as a special guest on programs such as Traders Television and Power Trading Radio. Recently, in a futures trading combine, I was awarded a funded trading account by a proprietary trading firm as a result of successful completion of their trading combine. So I try to keep my skills, up to date, and really keep sharp with what I'm doing. And what I do, guys, is I'm a futures day trader. So I host a 2-hour trading room with YouCanTrade, and we do this Monday through Friday. It's a great room. I've got a great group of students in there, and that's what I do on a regular basis. So I host this trading room where we're looking to identify a specific day trading methodology and also identify specific trading opportunities. And we do focus a lot on the equity futures as well as crude oil. Okay, so that's kind of what we focus on in the room. So you're very much in the right place, guys. Between Craig and me, you've got a lot of great stuff going here. So I have a course coming out that is going to illustrate the methodology with which I trade. Okay, and then of course there's also one-on-one coaching that we offer at YouCanTrade that I offer as a part of that as well. So and then for any sports fans out there, I head coach a women's softball team and a flag football team. So I try to take that coaching mindset and that coaching methodology into my trading room. So very cool stuff. Okay, let me pull a chart, and again, that's enough about me, guys. Let me get right into the charts here and again talk about why this is a really great day as far as what we're doing and what Craig is showing us here. So I'm going to go to a TradeStation chart. And again, any platform you're using is fantastic. Okay. And what I have here is I have a crude oil chart up here, and I want to talk about both the CL and the MCL. Okay. And I want to show you guys some of the opportunities that are really available to you now that weren't available to you last week, okay, in the form of the micros. Now, again, without knowing, the experience of the traders in this room, I'm sure we have new people in the room. I'm sure we have some experienced traders who've been trading for quite a while. And so, you're looking at my chart, and again, there's not enough time here to go through kind of the full methodology with which I teach and with which I trade, but I certainly want to show you a trade that a student in my room actually brought up this morning, and then we had a chance to be a part of right from this morning. So again, I just want to show you how this trade worked, and then I want to show you some of the things that you're able to do with the new micro that you were not able to do with the regular CL, or you were, but it just would have cost you more. Okay, and again, so depending on your experience, maybe you didn't want to put that kind of investment on, or maybe you didn't want to take that kind of risk. Okay, so Craig did a beautiful job of illustrating some of the price points, and that's what I really want to zero in on here, guys. Kind of a brief overlook of my chart here. Obviously, I've got a candlestick chart up here. I'm on the CLQ21 in this example. This trade is from this morning. I've got a few indicators on here, and again, I don't have time to get into how I use all of these indicators, but that's what I do in the room every day. Okay, so in doing that, guys, I've got a couple of moving average lines. I have what's called a VWAP, which is a volume weighted average price, and I have a MACD here at the bottom. Okay, so what I normally will do is I will take crude oil, for example, and I will look at some of the larger time frame trends. Now, remember, I'm an active day trader, so I'm looking to be in and out of the market same day. I'm looking for intraday opportunities on highly liquid products, and that's why, again, Craig did a beautiful job of illustrating, the micros on the equities, okay, the equity futures, the Dow, the NASDAQ, the S&P, the Russell, and now finally, the micro on crude. And it gives us flexibility, guys, that we didn't have before. Okay, for example, if you're looking at a specific entry point and looking at the candle, there was more risk there that you wanted to take. The micros now give you an ability to drop that risk by, a lot. Okay, so let me get right to the numbers here and show you this example from this morning. So as I'm looking here at this is the 1037 candle. You can see the date up there. This is right from this morning. Okay, again, this is an actual trade from this morning's trade room. So I'm looking at the 1037, and to surmise this quickly, let's just say that we were in a downtrend on some of the larger time frames. this was the first candle with which we saw the MACD turn from positive to negative. It's located below the VWAP, below the moving average. Point being, there's a lot of bearish scenarios here, okay? So this is why we chose this candle, why I chose this candle to participate in a short trade, okay? And if you look at the candle, what I've done is I've taken the Fibonacci drawing tool and I've customized it to be able to identify risk rewards, which again, as you know, some of you know, and as most of you know, that's one of the first things you want to do in putting on a successful trade. So if I look at this entry candle, I'm going to call it, okay, and I put my Fibonacci drawing tool on it, you can see that I've got about 28 cents of risk on this trade, okay, if I'm using getting short below the candle and putting a stop above it. Okay, so again, I'm going to use margin. I'm going to participate in this trade. I've got about 28 cents or ticks of risk. And again, like Craig mentioned on the CL, that would be $10 per tick. You've got about $280 of risk on that trade per contract. Okay, so for some of you, that's no problem. Okay, if you're trying to stay within a certain risk parameter, that's no problem. Okay, but for others, that might be a lot of money to risk on one trade. Okay, so I'm going to take you through this trade and show you what you're able to do now on the micro that may have been a little more challenging or certainly would have cost you more on the CL. Okay, so again, you get short this trade. And ultimately, now the way these numbers work, just if you're someone that's not using TradeStation or have never seen the Fibonacci drawing tool used this way, okay, this is kind of something that we do in the trade room, and I've shown the students how to use this, and it helps us identify that risk reward quickly. So if we're looking at 28 ticks or pennies of risk, again, that's about $280. So, you know, to a 2-to-1 risk reward, you know, would obviously be double that, okay? You know, $560. And then of course a 3-to-1 would be obviously greater than that. Okay. So, and I'm outlining the whole trade here because I want to show you how the trade literally went to this 3-to-1, and you'll love it when it works out like this, right? Literally went to the 3-to-1 before it retraced off of. And again, you can see that the 400% represents 3-to-1 on TradeStation Fib tool, the way that I've customized it for the students. Okay. So beautiful trade. Okay, so again, if you've taken that trade from entry to a 2-to-1 or even a 3-to-1, great trade. Okay, now let me show you what you can do with the micro that would have been more challenging with this, and this is applicable to the other futures as well. You know, Craig mentioned the micros on the Dow, the Nasdaq, the S&P, and the Russell, and I do this exact thing. I trade micros. Okay, and the reason I trade micros is that one example would be, as I went through the trading combine not too long ago, okay, again, there's a daily loss limit on that in that combine, okay, and in this example, it was $500. So if you take greater than a $500 risk or loss on one trade, you're literally thrown out of the combine, okay, and you have to literally pay to get back in, okay. So obviously you don't want to do that. That's where it really teaches you about risk. So, you know, if I take this trade at 280, you know, again, it's within the 500, but, you know, you only get so many of those. So if I see a candle where there's more risk than I want to take, that's when I will go to the micro. And what I like to do, and I've shown this in the room, this is going to be a part of my course that is going to be unveiled the end of the month. But what you can do is you can scale out of these trades in a way that makes sense trade management wise. Okay, so follow me on this methodology here. So if I'm trading 2 or even 3 contracts, okay, first of all, at $280 on the micro, that would be $28, okay? And of course, if I did that on 2 or 3 contracts, we would just go 28 times 2 or times 3. So we're under $100 to put this trade on the new CL micro, which is phenomenal, okay? And obviously your risk reward, what you can do, one approach to this that you can do that is so powerful is you can consider locking in profits at a 1-to-1, okay? And if you wish, then take your second target to a 2-to-1 or a 3-to-1. Now do the math on this, okay? Let's assume that you're trading 2 contracts. You exit your first at 1-to-1, and then you let your other one go to the 2-to-1 or the 3-to-1, okay? If you hit the 1-to-1, you've locked in profits. You adjust your stop modestly, and you have a winning trade. Even if the whole trade went against you, if this entire chart after hitting 1-to-1 went against you, you are still profitable on the trade. First of all, how cool is that, right? And again, it's only costing you under $100. You know, actually $56 is literally what it will cost you to do 2 contracts on this specific trade. Okay. Now, again, that's one methodology. Another methodology, and again, as long as it's within your trade plan parameters, imagine doing 3 contracts. Okay. Now you're still under $100 of risk. Okay. But now all of a sudden, imagine you take 2 off at the 1-to-1. Okay. Now think about this. You've just made 1-to-1. You've just made money on 2 contracts with only 1 contract of risk left. Okay. If this whole trade at that point went against you, you've made money. Okay. So you see why I get excited about this stuff and why I've been fortunate to have and grateful to have a really nice following in the trade room, and it's growing every day. Okay. Is that we're showing these kinds of things. And again, this kind of trade management where, you know, if we can lock in a 1-to-1 and assure ourselves or lock in profits at that point based on trade management, what a cool thing to be able to do. And what's really powerful about the micros, and specifically about the crude oil micro today, is that we couldn't do this last week. Okay. Again, you could do it on the CL, but it's going to cost you a lot more. Okay. $280 times 3 contracts, you know, you're talking about a lot of money there. You are definitely over the $500, you know, that I was experiencing as a daily loss limit in the combine that I participated in. So now all of a sudden you're doing this, you know, for under $100, and you're using what you're learning here and what you'll learn in my trade room if you decide to become a part of that, you know, to be able to actually make money on a trade that only goes 1-to-1. Now, again, please don't misunderstand me. I'm not suggesting we should trade with 1-to-1 risk rewards. Okay. If we're only trading 1 contract, let's get out to a 2-to-1, 3-to-1, make sure that we're trading with the right probabilities. What I'm offering to you today is just showing you how, because of what Craig has unveiled today and the CME has unveiled today with the micro, the additional flexibility that it gives us to be able to participate in trades and actually, you know, be a part of something really powerful. Okay. And again, like I said, this is awesome because we're talking about crude oil today, but this does apply to the other micros that have been unveiled, you know, in 2019. So, you know, so again, just to kind of take you through the rest of this example here, you know, you can see where, you know, we did get in the trade here. Again, the trade went our way. You can see where we based here at the 1-to-1. Okay. So again, if you're trading, you know, 2 contracts or 3 contracts, you would have taken you could have taken 1 or 2 off there, adjusted your stop modestly. And then all of a sudden when price got to the 2-to-1 or the 3-to-1, you know, there you go. You've just made more of a profit on that trade. So again, it's about flexibility, guys, and about risk management. That's all trading is all about. It's about managing your risk. And then obviously, you know, managing the trade so that you can do tricks like this, you know, and actually be a part of, you know, participating in a trade that, you know, may go either all the way for you, or even if it goes modestly for you in turns, you could still be profitable. Okay. So
Jerry, I'm going to jump in real quick if you don't mind.
Absolutely, please. Just
to kind of underscore what you said, because that scaling technique that you brought up, I think is very powerful. It's one of the main benefits that we always promote with these micros. And, you know, I think maybe I'll emphasize that by saying that, you know, nobody's telling anybody what they should trade and what their risk tolerance is, right? And so I'm not here and Jerry's not here to tell you should trade the micro or you should trade the standard. And there's even a mini in between that in the crude oil. But what it does is it gives customers a lot of flexibility. And I've mentioned the micro equities, but keep in mind, we also have micro foreign currencies. We have micro gold, we have micro silver. And next month, we're going to come out with a micro yield-based treasury product. So we've got an entire suite of these. And Jerry just mentioned it. This is a technique that we're looking at in crude and that you can now exercise in crude. But we have, you know, a full range of asset classes with these micros. And the last thing I'll say is that, you know, just from my perspective, we see customers who only trade micros, right? Maybe it's their risk tolerance. They don't even, or capital capital constraints or whatever. They're comfortable with just micros, and that's great. We have customers that only trade our standard products, right? They have probably bigger accounts. They have a higher risk tolerance. They have a lot of capital, whatever, and that's great for them. And then we have a whole bunch of customers that trade both. And it's really just kind of figuring out, I think, what that optimal mix is for, an individual. And I just wanted to jump in and kind of comment real quick, Jerry.
No, Craig, thank you. Thank you, first of all, for again, letting everyone know the other products that you guys do offer micros on, because you're right. I hadn't mentioned those. And those are, again, there are people that trade gold or foreign currencies. And for those of you that do that, that's by all means, the micros, I think what Craig and I are saying is it offers you so much flexibility, guys. And I get this question in the room once in a while, when would I trade the CL versus the micro, or when would I trade the NASDAQ versus the micro? And, the answer is simply based on risk, guys. You can see how the market moves through the course of the day. And obviously in the opening of the market, 8:30 Central Time, when the U.S. session opens, some of those candles can be really big. So, if you're wishing to participate in one of those, some of those candles can carry a large range. And so my answer is very clear that if that candle carries more risk than I'm willing to take on, that's when I will go to a micro and either trade one or two, or depending on your plan. What's going on here is it gives us the flexibility to be able to do that, whereas years ago, you either traded it or you didn't. And now all of a sudden there's another choice. And I think this is so great for traders. To be able to do something like, I've shown you guys today, and like Craig and I have talked about together. So yeah, I know there's a buzz, there's a buzz about this CL, and I know, Craig, you probably experienced it even more being a part of unveiling this, which is so cool. So, yeah, guys, I wanted to share that example with you. And like I said, that's something that we talk about and that I talk about in the trade room. I do want to share with you guys, if you're interested in becoming a part of my trade room, let me just share with you one slide here, and then I'm gonna turn it back over to Craig. But let me just share this with you. Yeah, right here, guys. So at YouCanTrade, we do sell an all access pass, which is the price has been adjusted modestly just for a limited time here to celebrate the relaunching and the new launching of our website. But it's $99 a month, guys, and that gets you into my trade room. We have 4 other great coaches there that also run trade rooms. So there's an options coach there. So I didn't talk a lot about options on futures, but that's something that I know Craig mentioned and that you can do. So, so I just wanted you to be aware of how you can be a part of, whether it be my trade room or someone else's trade room. That's one way to do it, guys. So I just wanted to do that. And let me close with one other quick example here, and again, I'm a futures trader, so that's what I do. That's what I'm emphasizing here. But if you are an options trader, you're still trading based on price movement of an asset, right? So, imagine, being long a put, at 10:37 this morning. Okay. So again, as Craig and I talk about flexibility, I just want to, again, offer to you guys, whether you're trading futures or you're trading options on futures, really valuable. And now with the micros, guys, whole new world. So, again, just want to thank you guys for being a part of it. Thank you for spending time with Craig and I, but thanks for taking me in, guys, and giving me an opportunity to be a part of such a special day. And Craig, thank you to you, man. What a great day.
Yeah, no, likewise, Jerry. It's been good, and I hope this is the first of many of these that we'll do together. It's a good comment on two things. One, just to kind of finish the thought on the different micros, and it kind of bleeds into the options. Actually, is I think we all know that certain products are cyclical in nature, right? So, right now they're equities are a little bit kind of in a lower volatility situation. Crude's kind of in a little bit of a higher volatility situation over the last week. Nat gas might be high and currencies might be low. And depending on your trading style, you might seek out products that are trading in a high volatility environment or a low volatility environment. And the nice thing about having all of these micros across asset classes is generally you can find something that's trading with a volatility characteristic that suits your style. So that's why I would encourage you, you might be looking at the equities or you might be looking at the currencies. Take a look at crude, take a look at gold, because, they're driven by different factors. There's some common factors that drive everything, but a lot of these things are driven by unique factors. The price movement anyway is driven by unique factors. So it's worth looking at. And the other thing I'd mention, because Jerry mentioned the options, is I did say we have options on the micro S&P and we have options on the micro S&P and the micro NASDAQ. Those are the only micro size options we have. But we have options on pretty much all of our standard size products. And beyond that, we've got a suite of software products on the CME Group website called Quick Strike. And, I would say that probably 15 years ago, the software we have out there would have been thousands of dollars a month had you just bought it off the shelf. And it's out there for free now. And a lot of it is options analytics, options volatility analysis. And even if you're not trading options, you can actually glean a lot of information from the option markets as to what it says about the futures market, in terms of how volatile the options market is saying the futures is going to be. The skew kind of tells you, are the calls bid or the puts bid? And that's just, it doesn't tell you where the future's going, of course, but it's just another data point kind of in your analysis that might be worth looking at.
That's great stuff, Craig. Yeah, no, I love it. It's and thank you for the clarification on which options are options on which ones. That's important to know for everyone as well. So yeah, there was one comment in here, guys, that I did want to Alfred, I believe, actually. Yeah, I just wanted to acknowledge your appreciation of this. He congratulates you, Craig, and the CME on getting this product out there, and I think I couldn't agree more. Let me see. I'm just looking for this thing really quick. Yeah, and then this is from Idris. Craig, you actually gave this number earlier. Idris might have missed it, but what is the average daily volume for the micro MCL? And would you maybe repeat that for everybody? Because I know you said it was growing really consistently in just a couple of days here.
Yeah. So the first day we were over 17,000. Yesterday we were at about 24.5, and today I'm looking at my screen in front of me. We're over 40 already.
Wow.
So, like I said, by any measure, I guess except for the micro equities, that's a great start to any new product launch. And I should mention, maybe even as important as the volume, maybe even more important as the volume, is that the bid offer size is 1 penny wide already after just 2 days. So, you can't get a bid offer smaller than that in this product. So the market makers are there, the liquidity's there, and the volume's there.
I love that, and that's one of the things that in my room, we really narrow down assets. Again, the CME has so many great assets to trade. We narrow it down a little bit based on volume. And again, it's in a 2-hour room, it's hard to be looking at 15, 20 different things. So we try to narrow down to the U.S. equities, the Dow, the NASDAQ, S&P, Russell, and we do focus on crude. So we look at those, we focus on those 5, and then we also focus on the micros of those 5, again, for the trade management aspect of that. So, but they're like Craig said, the volume on them is excellent. The micro here on crude is obviously growing at a rapid pace in just the first couple of days. And, for those of you guys that are new to trading, that spread is really important, guys. That difference between that bid and that ask, if you're buying at a market, you want to make sure you're not, losing 5 cents off the bat on the spread. So that's what's being said by that. So that's why the liquidity and the tightness of that spread, and even on the new crude oil micro, with that spread being a penny, yeah, it doesn't get any tighter. So that's super positive. And Gregory, I just want to acknowledge your question as well, real quick. You mentioned about 3 contracts. That means the margin will be about 1590. And yes, the math I believe sounds right on that. Craig, you agree?
Yep.
Okay. So yeah, so depending on your account size, again, imagine being able to participate in a trade like that for $1,500, $1,590.
Right, and again, at call it $70 a barrel. That's a $21,000, right? $70 times 100 barrels. That's $7,000 a contract. If you're holding 3 of those, that's $21,000 worth of crude oil exposure, for which you're putting up about $1,600. So we talk about how capital efficient futures are, and that's kind of a pretty good example of what we mean. So, for $1,600 performance bond, you essentially have, like I said, exposure to over $20,000 worth of crude oil.
That's awesome. Nora, thank you for the question. What time is my trading room? Nora, I go 10 to 12 Central Time. Okay, I go 10 to 12 Central Time, so 11 to 1 Eastern. And the market, again, like Craig illustrated, the volume is there, so there are opportunities throughout the trading day. And I'll tell you what, we see we see opportunities most every day. Okay, and again, we're looking at a few different assets. So, but to answer your question, yeah, it's 10 to 12 Central Time, and we've got a great group in there. I've got a number of them with us on this webinar here, so it's great. And then I want to thank Alfred. Didn't know CME had an options tool. Good to know. Thanks for sharing. Yeah, Alfred, thank you for the positive words.
I saw that. Let me just be clear too, because in case you missed it, if you Google, I don't have the URL in front of us, but if you Google CME Group Quick Strike, and that's quick without a C, so QUIK strike, all one word, CME Group Quick Strike, that'll bring you to the entire suite of options tools that we have out there.
I love it. I can't tell. And guys, you guys who were with me in the room, and Adrian, hello. I see I've got some familiar faces, but Craig, I can't tell you how many times we use your website to, to check volume on specific contracts, and just it's a phenomenal resource. So, guys, I always tell people, if you ever have questions about futures, go to the CME Group. Go to there and take a look at what they have there, because they've got a ton of things to be able to educate and really help. And like I said, when we were looking at crude earlier in the week, I'm like, what contract are we trading? So, you go to the CME Group and you can see exactly which is the most liquid contract. So, yeah, phenomenal resource, Craig. You guys do an amazing job over there.
I see a question. What is bid and ask? Is that asking to define what that means, or what the actual numbers are?
I would probably hit a definition on it. Might be a new trader.
You want to take that, Jerry?
Sure, yeah. Yeah, I'm just reading this other one as we go. Yeah, Pioneer, double check it. Where exactly on the CME website do you go to look for volume? If we have a second, I'll let Craig take that one, but it's you just got to navigate under the tabs. It's not difficult to find. Nisha, I believe it is. Yeah, the bid and ask, Nisha, is just literally, if you look in a matter of fact, if you look at the here, let me do this for you. So we have a couple moments. Let me share my screen with you, and I'm going to pull up TradeStation, and I'll show you where it is. Sometimes, like they say, right, a picture is worth everything. It'll make this. So Nisha, you should be able to see my screen. I'm on CL up here, so you can see the bid and the ask is 73.05 by 73.06. That is the bid and the ask. Okay, that's where people are buying it and selling it at market. Okay, and literally, as Craig said, you can see it's a penny difference. So, if I buy at market, I'm buying at the ask price or the higher price. If I sell at market, I'm selling at the lower price. So that's why you want that number to be as tight as possible. And again, like Craig said, it doesn't get any tighter than a penny. So, but Nisha, you're probably brand new. Again, seek the right education, because it's a great question, but it's definitely something we're going to cover in the beginning. But yeah, but to answer your question, that's what that is. You're simply looking at the difference between the bid and the ask, and that's how you use it. So, thank you for the question there, Nisha.
Yeah, as far as the question on the website goes, if you go to cmegroup.com and scroll down, we actually have a lot of our major products right there in a snapshot, current price with volume. And then if you click on any of those, it'll bring you to the detail of those products, where you can find prices, charts, contract specs, everything like that. And if the product you're looking for, maybe you're looking for more of an esoteric product that's not featured on the front page, if you just Google the product in the search bar, it'll come right up. I think it's pretty navigable, if that's a word, navigatable. I'll make up a word.
I tell you what, I don't know if it's a word or not, but it is that. I will give you, by all means. As
long as you know what I meant.
Yeah, you can get on that site, guys. You'll figure it out. It's not tough. Yeah, CMEgroup.com. Well, I can't tell you how many times we've gone there and how many times I've pointed students to that, because it's a great guideline. It's set up well. It's easy to navigate, and it's very very good. Guys, any other questions? We covered a whole lot here. We always do, and this has been a great time with you guys. But just really, like I said, really exciting. And this unveiling offers flexibility and opportunities here that, again, weren't available 5 days ago. So really, really exciting to be a part of this, and grateful to Craig to be able to be putting this thing on. Pioneer, I use the tool the way I have it set up for stops. Okay, I don't use it necessarily for stops, but I use it to illustrate risk reward. I hope that helps. Okay, Don, you're welcome. We appreciate you being here and for coming in. And Anything else, guys, before we get to wrap it up here and go from there? Craig, I'll let you close it then, but I just want to thank you again sincerely for doing this. I thought this was great. I mean, you're awesome. Your information is phenomenal. What you guys do with the CME is phenomenal, and I'm just really grateful to be a part of this and being, have had a chance to participate and share my excitement with everyone regarding what you guys, just unveiled. So, Craig, thank you again, man. Real pleasure.
Yeah, no, I appreciate it, Jerry. The feeling's mutual. Like I said, I do hope that this is the first of a lot of this type of stuff that we can do together. There's certain things I'm not allowed to say. I'm not allowed to give opinions on futures prices. I'm not really allowed to talk about charts like Jerry is. I can sort of give facts. So it's nice to have Jerry here to kind of analyze the markets like a trader would. And I do appreciate everybody taking the time to spend a little time with us today. I think it's a great new product. We're off to a great start with it. And of course, as always, I'd like to thank again TradeStation and YouCanTrade. They've been longtime great partners of CME Group, and we look forward to working with them in the future. So thanks again to everybody.